There's a pattern with coaches who've been in practice 2 or 3 years without a complaint or a contract dispute. They look at their insurance, if they have any, and assume it's fine. Then a corporate client asks for a certificate of insurance with specific coverage types and minimums, and the policy they have doesn't meet the requirements. 3 coverage types, 2 carrier tiers, and 1 AI exclusion risk most coaches aren't checking yet. There's a pattern I see with coaches who've been in practice 2 or 3 years without a client complaint or a contract dispute. They look at their insurance, if they have any, and think it's fine. Then their first corporate client asks for a certificate of insurance with specific coverage types and minimums. The policy they have doesn't meet the requirements. The B2B market especially assumes you're covered. This video makes sure you are. Coverage Type 1. Errors and omissions, also called professional liability. E&O covers claims that your coaching services caused harm. A client alleges your coaching contributed to a bad business decision, a botched career transition, a relationship rupture in an executive team. What it does not cover: physical injury, property damage, cyber events. Those are separate coverage categories. The underwriter matters. Generic professional liability policies written for consultants often exclude advice given in a coaching context. Coaching-specific E&O, Westminster Global via the ICF Affinity Program, Insurance Canopy Hiscox, is written with the coaching engagement in mind. The policy language gap is where coaches get caught. Mid-market corporate clients typically require $1 million per occurrence and $2 million aggregate as a minimum MSA condition. Coverage Type 2, General Liability. GL covers the physical world exposure. If you rent in-person meeting space and a client slips, that's GL. If you cause property damage. If you're accused of personal injury in a non-professional context. For fully virtual coaches, the GL exposure is lower, but corporate clients often require GL as a condition of contracting regardless. Their MSA template includes it whether you coach in person or not. Standard corporate requirement: $1 million per occurrence, $2 million aggregate, the same limits as E&O, often paired in the same policy or bundle. Coverage Type 3, Cyber Liability, the one coaches most commonly skip. Cyber covers data breach response costs, forensic investigation, client notification, regulatory penalty defense. Coaching practices collect client names, contact information, session notes, assessment results, and in corporate engagement sometimes access HR systems. If your laptop is stolen, your cloud storage compromised, or your email phished, you have a data breach event. Client notification is not optional under GDPR, CCPA, or a growing number of state privacy laws. The solo coach who thought they were too small to matter finds out otherwise. Cost range as of 2026, $99 per year for the insurance canopy rider at limited limits, $400 to $900 per year for standalone cyber from specialist carriers. Most volatile pricing category, refresh annually. This is the part generalist small business insurance advice doesn't give you. Pay attention. The carrier market for coaches breaks into 2 tiers that serve different operator situations. This is a decision rule, not a tribalism statement. Tier 1, vanilla solo and direct pay B2C. You're coaching individual clients, no enterprise prime contractors, no platform roster work, no federal contracts. Westminster Global through the ICF Affinity Program, Insurance Canopy, Hiscox, Next Insurance. E&O cost range, $140 to $500 per year at $1 to $2 million in limits. Tier 2, subprime contractor, enterprise, federal platform. Enterprise with flow-down liability requirements, federal or DoD work, platform roster work naming the platform as an additional insured. The Hartford, Tandem's carrier, plus Hiscox commercial tier, Liberty Mutual, Chubb, AIG specialty. E&O 5 million or more in aggregate. Total insurance program cost, 3 to 10 times the Tier 1 cost. The decision rule, read it once and apply it every time you evaluate a new engagement. Read your prime's or platform's flow-down requirements before you buy insurance, not after. If your scope routes only through individual clients, Tier 1 is sufficient. The moment your scope includes prime contract or platform work, Tier 2 is mandatory. Discovering the gap when the prime requests a certificate of insurance showing 5 million aggregate, when your policy caps at 2 million, is the expensive way to learn this. The scenario that costs coaches real money. A coach operating for 3 years on Westminster Global E&O, 1 million per occurrence, 2 million aggregate, sufficient for their practice. They get a referral to a corporate engagement routed through a federal prime contractor. They sign the letter of intent. Then the MSA arrives. The flow-down clause requires E&O at 5 million aggregate and names the prime as an additional insured. They call Westminster Global. Westminster caps at 2 million aggregate, the ceiling of their solo coach tier. The prime won't accept it. 3 choices. Lose the engagement, scramble to switch carriers mid-contract at full rush premium, negotiate the limit down, which most primes won't do on federal work. The operator move would have been to read the MSA flow down requirements before signing the letter of intent. That's the Module 6.2 checkpoint. The carrier conversation happens before the contract conversation, not after. This is exactly why Tandem carries the Hartford for its enterprise and federal work, rather than a vanilla ICF affiliate policy. We're naming the carrier. We're not publishing our premium numbers. And we want you to notice that move. The number that's right for Tandem isn't the number that's right for you. Different state, revenue tier, claims history, prime contract flow-down requirements, and carrier appetite all change the quote. When a peer asks you what you should pay for E&O, the honest answer is the same one we're giving you here. Get 3 quotes for your specific stage, state, and engagement scope. The operator decision is generalizable. The moment your engagement scope includes prime contract work, the insurance tier changes. The specific premium is yours to run. Tier 1 carriers verified 2026. Westminster Global, the current ICF-endorsed coaching insurance provider. Westminster holds a master policy for ICF members. All ICF members automatically qualify. E&O professional liability only. No standalone GL or cyber on the ICF member pages. Published Year 1 rates for revenue at or below $100,000, $140 to $340 per year depending on class. Member portal, westminster.global. Insurance canopy, coaching specific insurer. $229 per year for bundled E&O at 1 million per occurrence and 2 million aggregate plus GL. Cyber Rider available as an add-on at $99 per year. The lowest published all-in price for a credible E&O and GL combination. Continuing Tier 1 carriers. Hiscox explicitly markets to life, career, and executive coaches. E&O starting floor $270 per year per Hiscox's own site. GL and BOP available with a 5% bundle discount. Online quote, instant binding. Next Insurance, digital native coaching specific pages. 73% of customers pay less than $45 per month for E&O per next published pricing as of March 2025. Pro tier with 1 million E&O is the standard recommendation. Instant COI issuance, relevant for coaches who need to produce a certificate of insurance quickly for a new client. Note, Forrest T. Jones was historically cited as the ICF carrier. As of 2026, no active coaching product page exists at ftj.com. Westminster Global is the verified current ICF affinity program. Tier 2 carriers, the commercial tier for subprime contractor and enterprise work. The Hartford, Tandem's confirmed Tier 2 subprime contractor carrier. E&O, GL, BOP available. Coaching rates require a quote. Traditional carrier with strong financial ratings and established claim support. Named explicitly here because this is Tandem's confirmed choice. And the operator decision logic, the subprime contractor flow-down requirements, is the teaching content. Hiscox's commercial tier. Hiscox offers both solo coach, E&O, and commercial professional liability at higher limits. The commercial tier is the relevant product for subprime contractor requirements. Liberty Mutual, Chubb, AIG Specialty, large commercial carriers capable of issuing $5 million or more in aggregate E&O and named insured riders for prime contractors. Quote only. Rates vary significantly by engagement scope. Cost benchmarks as of 2026 for Tier 1, solo coach, virtual practice. E&O, $200 to $500 per year for $1 million in limits. High confidence center of range. Westminster ICF program sits at the low end at 140 to 340. General market carriers cluster from 229 to 600. GL, $180 to $400 per year standalone, often more cost-effective as part of a BOP. Cyber, $99 per year at the insurance canopy rider level, limited limits, to $400 to $900 per year for standalone cyber from specialist carriers. BOP, E&O and GL bundled, $229 to $600 per year at the solo coach tier. These are annual refresh estimates. Premiums vary by state, prior claims, and carrier underwriting cycles. Tier 2 benchmarks. The subprime contractor commercial tier. E&O $5 million or more in aggregate. Total insurance program costs 3 to 10 times the Tier 1 cost. Specific numbers are engagement dependent and carrier negotiated. Tandem specific figures are internal and not disclosed here. That's the teaching. The range exists, the decision rule exists, the carrier options exist. The specific quote for your specific scope is the number you need, and it comes from going through the quoting process with a carrier that serves the Tier 2 market. 2 additional Tier 1 options for specific practice profiles. HPSO, Healthcare Provider Service Organization, covers life coaches, health coaches, and wellness coaches. Listed as covered professions. Quote required. Healthcare adjacent positioning may be a stronger fit for coaches who work adjacent to clinical settings than for pure ICF methodology coaches. Coalition, cyber-only specialist. No published pricing, individualized underwriting based on a risk scan. Relevant for coaches who want active cyber monitoring alongside coverage, not just a rider. If cyber exposure is material to your practice, say a coach who manages client data across multiple corporate HR integrations, Coalition's approach is worth investigating. One more thing to check, and almost nobody is checking it right now. 2 major carriers, Berkeley and Hamilton Insurance Group, have introduced absolute AI exclusions from their professional liability policies, starting in 2025 and continuing into 2026. The policy language says claims arising out of or in any way involving generative AI are excluded. If you're using ChatGPT to draft session notes, an AI note taker to transcribe your coaching sessions, or AI-generated assessment questions in a client engagement, and a client files a complaint that touches anything involving that work, your policy may not respond. Even with an otherwise valid E&O policy, no coaching-specific carrier, Westminster, Insurance Canopy, HPSO, has addressed this publicly as of 2026. This is an active underwriting trend that started in E&O for lawyers and is moving across professional services. At your next renewal, ask your carrier directly, does this policy contain any AI exclusion? Get the answer in writing. We'll come back to this in Module 9 when we look at AI tools in operations. The insurance decision and the tool's decision are not independent. The insurance checklist in the lesson resources, a 4-column review grid, coverage type, what you currently have including carrier, policy number, and annual premium, what the requirement is at your tier, and a gap action column. A 5th column, AI exclusion status, verified, unverified, or excluded. A 6th column, tier status, Tier 1 sufficient or Tier 2 required based on your current engagement scope. Pull out your current policy. Run the checklist. Every gap is a task. Every unverified on AI exclusion status is a phone call. Every Tier 2 required without a Tier 2 carrier in place is a priority action. Next, insurance covers you after something goes wrong. Contracts reduce the probability of something going wrong. 3 contracts and the clauses most coaches skip.